Right, Sherman here. So today is the 13th of May. I thought I made a video today because I heard someone mentioned that the S&P is not doing well. Okay, never mind. Let's go take a look at S&P. S&P always had this very interesting look. This was always very interesting about S&P. Very strong move right now. Okay, so this move has at some point, sometimes you could get one more move down here. It's possible, but sometimes you don't, because the unfortunate thing about this is sometimes when you get structures that are very sharp, they just break and they go very far. This is what I would consider uh, a kind of leading diagonal type of structure, basically. Right. Usually structures that maybe go like this are like kind of flat. Yeah, they just go here. But then where they go after that, it's 50-50. Maybe it continues to climb, maybe it just collapses. Maybe on this side, it becomes this way. But you see, at the end of the day, that's just 50-50. It's of no real value. It's just something that you know it can happen. But when it comes to trading it, a lot of confirmation is required to figure out what's going to happen after that. All right. So basically, when it's a uh, leading diagonal, which means that this structure is very sharp. Right? The time factor is not long enough. Time factor meaning the amount of time it took is really really short in comparison to the motive wave over here. So usually when that happens, any kind of pullback, right? Usually you're looking for the buy up again. That is usually the case, or rather, that's the case that's what applies for me anyway. The bias that I would have. Sorry about that. Okay, so also one thing about S&P is it tends to crawl a lot. So S&P has got a behavior that's very different from currency. You see, very sharp but crawls very far. So just because it's a strong move, it doesn't always mean 1, 2, 3. See, this never happens. So S&P tends to have that look: strong, sharp move down and a crawl that goes a long, long way. Okay, so now that we have experienced, so now we know that the idea of impulse correction impulse doesn't really work very well for the S&P, because the impulse correction impulse usually you're expecting that, but in this case, this doesn't happen. But what happens is this, and then this one just crawls forever, and it's not strong. It just crawls sideways, constantly breaking new highs. Okay, so for the S&P, generally, I don't use idea impulse correction impulse. It doesn't work very well. Uh, because people trade impulse correction impulse expect strong pushes, but here the strong push was here, but the move up was not strong, but like sideways, a slow crawl. So people who only understand impulse correction impulse 1, 2, 3, they'll probably lose money there on the S&P. Okay. The people who do well in S&P generally are people who play with moving averages, and that's why a lot of books out there that teach moving average, they tend to choose the S&P and stocks, or even like Doge coins, crypto, because this type of currency tend to respect the moving averages more. All right, so that is a method that they're familiar with, and that's why they write books about it. But you bring those people to trade currency, they'll probably be killed, right? Like someone who does boxing and only knows boxing, goes to MMA ring, he does not know how to kick, does not know how to defend himself on the ground, he's going to get killed. So likewise, people who only know a certain style, play with moving averages on S&P, when they try to go into the currency markets, um, where it's not so trendy, and things often try to reverse very badly, that's when they end up losing, right? So when it comes to technical analysis, it's not. I've always said this: you cannot just know one thing. You need to know a lot of disciplines, and know where It's all at the end of the day, it's a probability game. You see, okay. So if you can lose, knowing how to lose well is a very important thing. Knowing how to take hits is very important. If someone always only thinks I can win every trade is a winner, he's probably not a trader. Okay? Or it sounds too confident. You know, when I trade, you always gotta think, what if it doesn't work out? I always trade with that thought in mind. What if it doesn't work out? Right? That's more important than the wins. So, um, so now that S&P, there was great fear because of this push down. Uh, it's See, in the grand scheme of things, it's hard to say what this is going to be for now, right? Because at the end of the day, there were all these pullbacks as well. So there were these pullbacks, you see, right? So if you look at these kind of pullbacks, let's just compare all these kind of pullbacks. You see, actually, it's just very normal and healthy for now. Okay, but there is one very bad pullback that can happen, which is this one. So if you ask me, you cannot really just because it came here, you just buy. It came here, you just buy, just buy. So generally, if you're putting on some kind of moving average, which is normally what people would use for stock like S&P, is you're looking for it to pull back to the moving average, as you can see. You see that, and then see it comes back to moving average. So this one, generally, what you're looking for is you're looking for a push back to the moving average, which is around here. And there's no real worries. Sometimes even though you're making a lot of money or you're losing your money, it's just part and parcel of it. And yes, there is a pullback here, but there were pullbacks here as well. There are pullbacks here, there are pullbacks here, there are pullbacks here. So if you do, should we buy? No, this is not a place to buy, right? Where should we buy? Well, I shall leave that for the experience. For I believe people watch this channel are kind of experienced. So where do you think that you should look for a buy? Yeah, okay. So the idea is you should look for a buy when it comes back, at least to this moving average. All right. If you don't see any reason to buy, all right, then of course this scenario might happen. Okay. So if let's say, oh, you just touch the moving average and I buy, touch the moving average and I buy, not a good idea. You need to wait for some kind of confirmation, maybe on a lower time frame, or you wait for this candle to touch the moving average. You wait for this red candle to be cleared out by something green. That's one way to look at it. And the time factor is about 1 week for it to touch, another 1 week for it to break above. It went above, it went up again, it came back. If you got stopped out, might have been stopped out. Depends on the trader. Again, this is day trading. Um, and if you survive that, then of course that would have been the profit to make. You can also look at this from as an impulse correction, impulse point of view. One, two, three, and so you know where your stop loss is supposed to be. All right. So that's all in that day trading. I don't really talk about that here, but I'm just talking about mainly about the forecast, about how you should think. Right. Day trading itself is another skill. Forecasting is one skill, but trading this stuff within the candles, you gotta really go in depth. Okay, you gotta monitor it for the next for each candle is 1 week, so you gotta be seeing what's going on within these candles. Um, so now this one has fallen, but hey, this as of now it just is any other pullback. You should not buy this because why? It's not a place to buy. It's in the middle of nowhere basically. So at least let it come back to some moving average. And what if this just suddenly keeps collapsing and does not show any strength after it touches the moving average? Fine, just let it collapse. Let it collapse to 3,000 basically, and then from here you can buy it. Then here you can make a lot of money when it goes up, right? So there's no. It's all just part and parcel of how to make money with the markets, right? So sell high, sell high. It comes here, look for the buy because it has happened before. So sell high, buy low, sell high, and buy the right places, right? Uh, so that's for S&P. Uh, Dodge, of course, was doing really, really well. I cannot. I mean, it just did so well. So over here, you see, it's when you start looking for the buys, and you can imagine how much it has moved already. I didn't exit here. I just let it go up. I didn't take profit. I didn't exit here. Did I exit here? No, I didn't exit here. Did it come back here? Did I exit here? No, I didn't exit here because I still think there's upside on the Dodge, basically. Right? Because these type of crypto and stocks, right? They when they respect the moving averages, that's what they do. They just respect the moving averages, right? But again, don't think that because moving averages seems to work for currency that works for Dodge and crypto or what else or stocks, right? If you apply these to if you apply moving when we apply moving averages to all these the S&P or the top performing US stocks because they're in a bullish market. They respect moving averages, but currency is not like that. I just want to emphasize that again. I want to emphasize it. Do not bring a moving average strategy into currency and think it's going to work. You know, if you do that, if you found success and you made $1 million in the stocks and you bring that using a moving average strategy and bring that into currency, you're going to lose half of it. And I know people who have lost half of it and they were completely humbled. All right, bring in one of these broker lunches because the broker will, if you trade a certain amount of volume, the broker will then organize some private lunch, and then we all go on board a ship, or we go somewhere for a meal. And then so happened one guy traded huge volume, and he shared his story with me and how he lost a lot of money in the currency markets. So I'm telling you now that although I may say something that this is how it looks, it works for the moving average, but um, don't think that this is the way to make money in currency. You know, there's a lot of things. There's a lot of things out there um, that sometimes work, and then it also doesn't work at certain times. But it just happens right now in this scenario. Yes, the moving average does work. Okay, so basically you're looking for the same thing. Also, you see this red here, the green. The green basically close past the red. That's why you're looking for basically strength, right? So in this case, if you see something like this one being taken out by some green and then it pulls back, let's say it goes up here and it pulls back, this becomes an impulse correction. You're looking for this one, all right? So that's what you're looking for Dogecoin, all right? So roughly around 22nd May, maybe around end of May, June is when you can start to see a slow. What I want to see is strength here, and then a pullback, and then a slow push upside. But since at 0.0 something, I was looking for the buy already. It does not matter for me. Whatever happens here just happens. But when it reaches around 90 cents, $1, you're gonna cash out a fuckload of money. I can tell you. All right. So yeah. So that's the thing about Dodge. All right. I did tell some people to buy here at 25 cents because of stuff like this, which I'm saying now on YouTube. I don't really share these things, but the thing is that some people didn't take any action, so what can you do? Uh, I mean, not sound too excited about all this money making and money and losses. Um, no, not that I lost. I mean, I've not been losing, but the thing is that it's just all very normal. Just another day, really just another day. That time when oil shot so high, one of those epic trades, really really epic trades. If you go check on I think TradingView, epic trades. I went you see here. So you should look for the buy. If you were oil trader, yeah, you can just look for the buys. You can look at some volume if you want. Some volume. There's big volume here. A lot of trades, a lot of transactions, big volume here. There was some big volume here. Let me see. Volume here before that was this one. And that's why when it hits up there, you're going to get this. So imagine if you don't understand, someone just uses moving averages, and you don't really understand how this volume works, or at which point in time did somebody decide to pump in orders, sells. then you won't understand how come it hits here and how come it pulls back. So if you were here, you thought that all right, it's you know, it's above my moving averages, right? I want to trade from here. I want to go up to this 200 moving average, and you just buy. You hit that. What's going to happen? Thumb, suffer. You'll be crawl. Let's go, let's go, let's go. Then you suffer. So knowing all this, uh, it's all important. You know, it's not just knowing one thing that's gonna make money. It's so much stuff. But here and there, I'll just mention a couple of points, and if it sinks in, because people who watch the channel, I think probably people who are pretty hardcore, right? The newbies probably just want to learn about some RSI overbought, oversold, stochastic overbought, oversold, but that's just for the masses, right? To really make money in this industry, I would say 99% of people cannot make it. That's the truth. Probably only a very small percentage, and those few have sacrificed a lot of their time. I mean, you got to be really hardcore to do well in this. Really, really hardcore. Hardcore like being an Olympic champion type of hardcore. Because I don't think I know that many people who can actually do very well trading, basically. Right? Most people, they may sound like they do well, but actually they're all working full time jobs, and and you can tell when they go around telling other people how much money they are making, and they are very ecstatic about it. That's very strange because people who make money in this industry also lose money, and they have to live through some drawdowns as well. So they don't really celebrate their wins. People who celebrate their wins tend to have, it's like they have never seen. It's like winning the lottery. It seems so special, you know. But people who trade for a living, it's like boxing, you know. You punch, you get punched as well. The market sometimes punches us back, right? So we should trade with a very composed mind, I guess, and not try to go around telling everybody how much money we are making. It's kind of weird. So that's oil. Okay, oil. Let's go look at some stuff like, let's go look at some of the majors, right? The majors. So moving average, this one is kind of, you see this 200 doesn't really work. Doesn't really mean much. Well, not on this time frame. But this is the bias right now. There is this bias, and also because of the DEX. So now I'm thinking of, forget about the moving average, but thinking a bit about correlation with the DEX over here, right? And of course, the time factor is also pretty decent, somewhere there too. Nice time box over here, right? See, so the lowest low is over here. This was awkward though. This was pretty awkward. Pump, 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 sharp up, down, sharp, a sharp up, sharp correction up, sharp down, like this. Right? Very, very awkward. But in the end of the day, that sharp move up was all the correction. Just to, what's the reason for all this? It's to knock people out of the markets. It's to knock people out of the markets. Somebody will short it up and short down. It's just all manipulating the markets so that they can get in on the low and you know, take the buy up. It's just very, very powerful funds at work. So uh, naturally, now that you're here, you're always looking for the buy basically. So if you ask me what are we looking for, the buy is the direction that I generally want. Well, not generally want, is the direction that I want. Right? But uh, how it gets there right now, this could crawl. This could crawl. Um, I mean, over here at the point in time, I was looking for the buys here. Here was one possible place, but if we just use the moving average strategy, you see that would have to be stopped out here. But it also depends on how the entry, how the what the lot size was. As if it was averaged down with good money management, all right. Because if it was, the money was managed properly, you thought this was the entry, you try to go in, but you try to go from here up to there. Because if you try to go from here up to there, if the lot size is small, then you're slowly averaging down. If the lot size is big, then it has to be cut off right here. That's one thing. The other thing is Okay, the other thing is this over here. CC price never really closed above this red candle. So a lot of went up weeks came back down. So you may not have tried to take the buy in that sense. So that entry would not have worked. So over here, still looking for the buy. So until finally when there was a red here and it closed above, this is one potential entry over here. So this is one potential entry. Pretty good. If someone had traded just this, that means you don't trade here at all. Only here you got in. That means this means not over trading. People who trade too much will end up losing money in this market. And there's some people who actually scalp, but make no mistake, scalpers don't scalp the entire day. They only scalp maybe 1 or 2 hours in the entire 24-hour period. So do not think scalpers are just making money every 30 minutes. It's not true. It's not true at all. All right. So this is one trade that you could try. If let's say you took the buy here, and you're looking for a swing move up, it's also in terms of day trading. There's always this chance that this could come back to this level. But if you're looking for a swing up there, then your stop loss would have been quite wide as well. You see, it has to be. You see that if you're looking for a swing move up there, that means you need to have a bigger stop loss to account for all the weird stuff that you could do right here. All right, so it depends on what the trader actually wants. If he wants to exit right here based off his risk, from here to there, then this might have been enough. And it's not a bad idea to to exit, let it come back here, and then try to go again. So you just take, as this moves up, you only take the buys. So it goes up, you buy. It goes up, you buy. But you don't try to live. You don't try to live the entire move. For me, it depends. Sometimes I live the through. I try to swing all the way to the top, but the euro dollar is having a negative swap now, so it's actually may not be a bad idea to just take profit and then, but just keep buying, trading only in the upwards direction. So if it comes down, then look for any setup for the upside again. And the reason you do that, of course, is because of this impulse correction, impulse idea. Okay, so uh, yeah, so that's the euro dollar. And so I talked about Doge, oil, the SNP, euro dollar, some of the good trades. Okay, the dollar index, is a little bit interesting. There is this chance that this dollar index could get up to this trade too. Very possible. It could come down like a one, two here, and then a three down. This is very possible. As of now, what is it going to go up? Well, can't say for now because right now it's still very much intact. You know, so it really has to try to pierce above. Maybe pierce above this candle first. Is what it needs to do. It needs to pierce above. At least take out this entire red candle first. Something engulfing. Something like this one. You see this green candle, and then it was probably taken out like this. So if it does something like this, right, then make an impulse, a correction. Yeah, yes, you could try for that. This is one possible setup. But right now over here, let's say we just take a buy here because we thought, oh yeah, some Fibonacci like this and hit the 717, and so maybe it's 1, 2, 3. That is bloody wrong. Okay, that is wrong. So you really have to go up first, pull back before you can actually take the next buy. So that is so if let's say you see something like this happen, it means that the euro dollar, since we're looking for the dollar strength, then it might mean this might even be coming back down like this. As the DEX goes up, there's dollar strength, then this one could actually end up being like that. Like this. This could be the dollar strength. That is possible. Right? So in that case, if it comes here, that is possible again. Right? So this is some things to consider um, when actually Like trading the markets, it's very tricky. Quite tricky. Currency markets are tricky. They're not so simple. Correlation plays a huge part as well. I would say for the most of the investors, people who think that they can trade but probably cannot, I will tell you, go look at Dodge, honestly, or maybe even Tesla. Oh, Tesla is falling. Okay, good. So you want Tesla to come down to around this level. That'd be perfect. 458. Good level. Good level. If you don't want to jump in too early, there's no problem. And if it falls, breaks this low, it's always a good thing. Because this cloud looks like this. They tend to be, you know, they tend to be good for the upside. All right. So perfect. It's very healthy correction. It's a chance for people to get in, basically. Right. So you want the same for Dodge as well. All this moves down, all very, very healthy. The players, the big players are playing the market, basically. So I would say look at Dodge, look at Tesla. Easier to trade. Currencies a little bit tricky. A lot of money you can make in it, but yeah, if you really want to trade it, I like the euro. You can look. You are like the euro dollar to the upside, right? You can consider that. And what else? I've not been studying it much of anything else. Because the Dodge went up so high, you can just stop. You can just stop trading. I like the euro pound too. You can look at the euro pound. There's a bias to the upside as well. You can look at this one. All right. So basically, this one, if I had to draw a chart, basically I don't want this one to break this level. If you can be intact, it will be the best. One move up, this move would be really, really good. Hey, this is a good move. This is an impulse correction, impulse idea too. All right. I'm hoping this is the first wave. See, I said hoping, right? Hoping. So if you find some confirmation moves, you can always, uh, when it starts to go up here, see how the moving averages follow. Yeah. So it pulls back to a moving average, then you can buy again. So you're trying to hop in somewhere on the moving average, and you assume this is the corrective structure. Nice time factored swing. Nice time factored swing. You see outside the box. If you can see it busting above the moving average, look for a pullback to moving average, and then try to buy again. So here in this case, you combine correlation with time box, very important, as well as the moving average. So basically, what it means that this entire moving average here is what fucking useless, right? It's useless. You only care about it when what? Yeah, when it's up here and it's here. So when this is up here and it's here, the moving average starts to go this way. That is when the moving average is of value. All right. When it's here, it's useless. So knowing when to take it off, when to put it on is a very important thing. And correlation and time box. So if you see like euro pound, the euro is strong, generally stronger than the pound. That's a good thing too. So look at correlation as well. Very important. Right. And of course, there's some harmonics play here too as well. Um, some harmonics play here as well. So this is basically the three two good levels to hit as well. So if you're looking at this as well, it hit the 618. So chances are it can also go to anywhere around these levels over here. 0.87, 0.88, around that level. Good level for it to come back up. And where do we not want it to go? You should not this level. As a trader, I know when to go there. So I already know at which level it's a no go basically. Okay. Um, okay, so that's it. Currency, crypto, as well as we have stocks, as well as bit of oil. Right. Thank you, and have a nice day. Bye bye.